This is Matthew Cratter from Trady University, and today I want to answer the question, is BlockFi about to implode? BlockFi is an online lending service for crypto and Bitcoin. If you've been following this channel, you'll know that I called the Celsius implosion just a couple weeks before it happened. We've been getting news that one lender after another has been freezing withdrawals. So just overnight, we learned that Babel Finance has suspended withdrawals. This is another lending platform similar to BlockFi and similar to Celsius. So the spotlight really has been put on BlockFi, and the market is quite worried about whether they are going to freeze withdrawals soon, whether they're having a liquidity crisis. And the main thing that's calling this into question is the question whether BlockFi had exposure to this hedge fund that appears to be insolvent and unable to meet its obligations, where its liabilities are actually greater than its assets. This is the hedge fund Three Arrows Capital. It looks like one of the founders is on the run, and there is a liquidation happening. This may be why we've been seeing Bitcoin getting hit so hard and Ethereum getting hit so hard as they liquidate their assets. So there is a lot of speculation that BlockFi has had exposure to Three Arrows. Yeesus here on Twitter asked BlockFi directly, does BlockFi have any exposure to your strategic investor 3AC? And if so, how are the risks being mitigated? BlockFi refuses to comment on whether they do have exposure to this client. Instead, Zach Prince, who's the CEO and one of the founders, put out this sort of vague tweet talking about how they have really good risk management policies at BlockFi, and so no one should be worried about these things. But as I always say, watch what we do, not what we say. And if you look at what BlockFi is doing right now, they are clearly under some sort of distress. Just a couple days ago, they announced that they're laying off 20% of their staff. And what's even more concerning is that they're trying to raise new capital. So when they raised capital last year, they raised $350 million, valuing the company at $3 billion. And what's happening now is they're raising money in what's called a down round, where they raise new money, but the company is valued at a lower valuation. This is very bad for morale. It usually leads to a lot of the best employees leaving a company because their options and their stock holdings become so far underwater when you have a down round. This fundraising happens. It's not very transparent. There's really no obligation, because BlockFi is not publicly traded, to publicize what's happening. But there have been rumors on Twitter that they've only been able to raise something like $85 million at a billion dollar valuation. So this fundraising, this new round, may still be ongoing. But what's interesting is when this article came out on June 7th, this was right before Bitcoin took its latest dump. So when this article came out, Bitcoin was still trading around 30,000. It's now closer to 20,000, which obviously puts distress on firms like this. If you're finding this video helpful so far, please hit that subscribe and like button, especially if you watch this channel regularly and are not yet a subscriber. So I'd say one of the more concerning things is if you're valuing BlockFi at $1 billion in this new round, there's a huge chunk of that that's already under the grip of the SEC. BlockFi did this settlement back in February of this year, actually on Valentine's Day, which is pretty funny, where they agreed to pay $100 million as penalties, and they no longer allow small investors in the U.S. to use their lending products. So out of this $1 billion valuation, they probably paid some of these penalties already, but a lot of this still needs to be paid out to the SEC, as far as I can tell. Now, in terms of where your money is actually being held at BlockFi, this is also extremely disturbing, as it is for many of these companies. So if we look at the BlockFi website here, it says that they use Gemini Trust Company, LLC, as their primary custodian. This is where your Bitcoin or your Ethereum, etc., with BlockFi are actually being held. When we take a look at Gemini's holdings, I could only find this old number back from May of 2011. So we can imagine that their assets under management have probably fallen with the whole crypto market since then. But back in May of 2021, Gemini, as a custodian, had $30 billion under management that they were holding in custody. And so BlockFi is just one of these groups that keeps their money, keeps the actual coins with Gemini. So if Gemini had 30 billion, maybe it's down to 20 billion now. The real problem, though, is they only have $200 million in custody insurance coverage. And so this means that there are many more claims if there's something were to happen to these either in cold storage or these hot wallets, and assuming that there weren't loopholes in the insurance that allowed the insurers to wriggle out. What it means is that there's not sufficient coverage at Gemini for all of their clients, and there's certainly not sufficient coverage for the holdings of BlockFi that are being custodied at Gemini. This is always a case. I think you won't be able to find an exchange like an exchange that's different from this where there's actually sufficient insurance coverage. It's just because the insurance is so expensive, and you can imagine under these distressed market conditions that it becomes even more expensive. And we're at the point now where things are blowing up, and there's a chance that this insurance may need to be called on. So 30 billion in assets, maybe 20 billion, maybe 10 billion, only 200 million in custody. So if you have your money at BlockFi, you are in line with everyone else at Gemini. Not your keys, not your Bitcoin, as we've been saying for years now, but it gets even worse. And I want to remind you that in bankruptcy at most of these companies, your Bitcoin and other crypto may be counted, and in fact probably will be counted among the general assets of the firm. So what this means is you'd be second in line after other creditors if there were a bankruptcy. We can look, BlockFi isn't publicly traded, so we don't get disclosures like this unless we're an investor in it, which we're not. That if you look at Coinbase's 10K and their risks in the business risks that they list, you can see this language. Moreover, because custodially held crypto assets may be considered to be the property of a bankruptcy estate, in the event of a bankruptcy, the crypto assets we hold in custody on behalf of our customers could be subject to bankruptcy proceedings, and such customers could be treated as our general unsecured creditors. What this means is if Coinbase or Gemini or Kraken or BlockFi go bankrupt, I'm assuming that BlockFi has the same setup where any assets you hold with them could be considered as part of their general assets, and as such have access that secured creditors, and there'd be other creditors in line ahead of you in the event of bankruptcy. Again, that's an assumption, but it seems to be the way that bankruptcy law is being construed in the U.S. as applied to these kind of firms. So you can be fairly certain that if BlockFi were to file for bankruptcy or completely cease withdrawals, that you'd be in line with everyone else, just like is happening with Celsius. I want to remind you of this video I did back in February of 2022, where the CEO of Kraken was basically saying, if the government tells us we will freeze your account, we will freeze your Bitcoin, we cannot protect you, get your coins cash off the exchange. This is the actual CEO and founder of Kraken telling people to do this. Please tell me why you're still storing your Bitcoin on an exchange or with a custodian or holding it at a place like BlockFi. It's really not worth it for 3 or 5% annual interest to risk losing on 100%. There's so many things that can go wrong. Politically, your account could be frozen, the exchange could blow up, and your assets could be considered part of the general assets of the firm, and so you'd be behind everyone else getting it. The insurance coverage might not be enough. And this is the point at which we're seeing the tide going out, and this is when things blow up. Holding your assets like Bitcoin on one of these firms' balance sheets in one of these centralized custodians, it's bad enough during good times, but during good times, these things usually have a way of remaining stable. But it's when there's distress in the system, when you have crypto hedge funds being eliminated, being liquidated, when you have companies like BlockFi seeking additional funding to presumably try to make payroll, try to pay the rent on their building, and possibly even to supply liquidity to their customers, because you're essentially having a bank run at a lot of these companies. And we're going to see who has truly good risk management policies. You can say you have good risk management, but what happens, especially what happens when you've tied up these assets in longer-term investments and your investors demand short-term liquidity and start pulling their ETH and Bitcoin off your platform. So it looks to me like BlockFi is under distress, laying off 20% of staff, seeking to raise more money at this huge down round that is down 66% from their previous round definitely speaks to the distress. And it's important that you're not the last one to get your coins out of a company like this. I'm not saying it's a sure thing that BlockFi is going to implode, but I can tell you one thing: I would not sleep at night if I held anything at BlockFi, on Coinbase, on Kraken, at any of these companies, especially companies that are having funding problems like BlockFi and are having to do a down round. If you want to learn more about safe ways to hold your Bitcoin, I'll link to these two free videos. The first one, the best ways to store small and medium amounts of Bitcoin using a hardware wallet and single sig. The second way, how to use multi-sig if you want to store larger amounts of Bitcoin. So I'll stick those in the description notes below. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.